And good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, July 17th, 2022. The Friday was an interesting expiration. It was higher as I had expected, so there weren't any surprises on that level. Apple did get to 150. Again, no surprises. AMD did get to 80 and then above, which is a little bit of a surprise. So most of the day really was falling in line with the expectations where the buyers were going to hold it up, they're going to expire higher, et cetera, et cetera. Now, had I really factored that the Dow would move 658 points? Well, probably not, but they did. And the markets moved big, with the NASDAQ cash actually finishing up over 200. So nice move, but no indications that it was an E wave or that this whole pattern is complete. So I'm going to dive right in and talk about that, talk about the breakdown, talk about what is likely or what we can try to expect for this first week of greater earnings, let's say, the more earnings, and as we start to move into next week, which we get a lot of the Titans come in. So Friday's expiration did finish higher. Now, what I have done is I've made an adjustment to the internal count of this fourth wave triangle pattern. And within it, it continues to hold the pattern. But because the S&P actually did break that low in its B wave, and that came down, I believe here, came down lower, in the S&P, I moved that B wave over. And if you catch that update, which will be on later, you'll see what I did. So in order to really keep these more in congruency in terms of they're moving in the same direction for primarily the same reasons, and I believe they're going to be NASDAQ stocks. So I did not want to move this B up here because then it doesn't truly fit with the pattern, but this C does. So C wave remaining in force, continuing to hold, look for a slight boost above 12,211, which was the high of A of C. And this is B of C. Now we're in C of C, and likely going to get up to 12,246. That's where the 50-day, the daily 50 moving average is sitting, and it's an EMA as well. And that's where that is sitting. And I'm looking for those to contain the move itself. I'm not looking for a much larger move. I know there's a lot of talk now because of the strength, because of so many different things. This is all going to push through this week. Then we got earnings, et cetera, et cetera, et cetera. So it's a lot of what ifs coming into play right now. And those that have followed me for a while, I don't get motivated by that. I'm motivated by the price action. I'm motivated by what the market does in terms of breaking what moving average. So I'm motivated more by the technical picture and the quantitative picture rather than the reason that one side or the other is coming and saying, oh, we're bullish in this, we're bullish in that. I feel that sometimes, okay, you're going to go with that because if you're really discussing on a retail level where they're going to put their money, then it is the companies that they believe will continue to just shine and make bazillions of dollars, and they're just continue to just go up and up and up and up and up. But that's just a strategy that just basically doesn't work 100% of the time. So in this particular case, it still, and in my mind, remains Apple. Apple is a huge factor. Now we're coming up to their earnings, which I believe are on the 28th of this month. Yep, the 28th after the market closes, we will get Apple. So we're only on the 17th, so we still got this week and then next week. So it'll be into next week that we'll get these earnings reports from Apple. Now, what can we expect in the meantime? Well, tomorrow, I believe the bigger ones we have, which are not in the NASDAQ. Actually, we have the only one that is Tesla. Tesla reports tomorrow. we do have some banks coming in. We got Bank of America, we've got Goldman Sachs, and they'll report, and that'll have maybe a little bit of a draw or a plus or a minus for the broader markets. Now, again, price action wise, I think that here in the NASDAQ, we need to now allow for continuation of the C wave, and for that C wave to reach up above, not a whole lot. And again, maybe not actually exceeding 12,262, because it should find fairly stiff resistance, at least on the daily chart, at 12,246 to 250. We'll call all the way up to 262. But in either case, I would be looking for the C wave to complete and the D wave to come in. And again, now we're starting to work within the confines of the channel lines. So as this now pulls out, we have an A, we have a B, we have a C, then a D, then an E, and then the completing move. So I probably, like many, start to wonder, how is the NASDAQ going to survive in a triangle pattern with all of these earnings coming out? And the best way that I can talk about it is that likely that it's going to be a mixed bag. And nobody's really going to know, well, what do we do now? This one made money, this one did make money, this one did okay, this one didn't do okay, this guided lower, et cetera. So I think it'll be a mixed bag, and that's what will produce this type of a pattern. But it'll be an A, B, C, D, and then an E, and then it should fall, as I've described, coming out of a triangle pattern. When that top is in and it is complete, the observation has been in the past and in triangle pattern that once complete, the market will thrust out of the triangle back in the direction of the trend, which right now is down. The trend is down. So I would expect this triangle to finish towards the upside and then decline and break through or thrust through the triangle, the pattern, the width of the triangle, which basically brings us all the way down to here to start, but ultimately down below 11,068 before all is said and done. And again, as I've been discussing, for a minor fifth wave, that likely would bring us down to 10,670, down to 10,500, somewhere in those areas. So that's what I'd be looking for there. Now, so what can we look for tomorrow? Let me move this down to the hourly chart and let's take a peek. First of all, thing to note, all of the moving averages are in alignment. And as they begin to cross, again, this would be the 50 on the 1 hour, the 50 EMA has broken above and is now closed above that 200 EMA. This kind of lime green, chartreuse green, is a 200 SMA. It's the simple moving average. And if the market is going to continue to move higher, even if it's going to gain another 100 or 200 points, which is totally in the realm of reality to do that, then the expectations would be for it to break above here. So that would be also the 200 EMA, but the 50 EMA to break above 18,865. And then everything will be in alignment, basically, for the market to continue higher. So on a moving average basis, it fits very cleanly. So let me go back out if I can do that from here. I can't. So let me just do this, come back out to that hourly chart. So where else we may find some resistance would be, of course, right here at 12,025. And then we have some resistance, and again, this is just price resistance at 12,086. And then we start to get very close, 12,190. So you have 12,100, 12,150, et cetera, big numbers. But I believe we can find some for completion. And again, A, B, and then we're going to get a C wave. And we're looking for 5 within this little C wave. It should still form 5 waves of its own, and just be within the triangle pattern, which is where C is accepted as a 3, but in this case it's a 5, 3, 5 for a C wave. Now, what can then stop it? Well, again, I think it's just going to on its own, but we have resistance at 12,211. And if we were to just kind of go up, we're about 12,190 to 12,200. If this just goes from here and we just work our way higher. Right now, they are indicating that the market is going to open at 12,130. No, 12,030, excuse me. Whoa, that'd be way too high. So we get about there, which on this hourly chart, not going to look like much, but it's a decent opening. Now, so we're going to leave room for it to go up there. We have resistance points for it to work its way through. And then it should complete the C wave, turn lower in a D wave, again, holding the channel lines, but 3 waves down and then 3 waves back up. Now that E wave will have potential that it could spike up and through that upper channel line for the triangle. And then that would be it. It reaches a high and then turns and moves lower within the confines of, boom, a minor 5th wave down. So unfortunately, this whole triangle pattern is in appearance still in force. And now we're going to balance it against what the market wants to tell us. And obviously the market is going to open up a little bit more, open up higher. The S&P is going to look like it's going to open up about 7. The NASDAQ 7. The NASDAQ is going to open up 11. So each will gain a little bit. If this is it, so in other words, if I have to turn this back around and make A, B, C, D, and this is the E, and that's what we reach, and then that's it. Somehow, I don't think that everyone's going to be prepared to do that without some outside interference. So in other words, a news story, something breaks somewhere, boom, and creates that situation where just everybody turns in conjunction and we just all sell. In lieu of that happening, that's what I would have to look for. If this was going to be reverted back, and that's the B, and that's the C, and that's the D, and this is the E, and the E is complete, then we're looking for it to turn and to start to break very quickly. Again, remember, end of the triangle, thrust out of the triangle, thrust out, and it would be down. We'd be looking for that thrust to be down as the minor 5th wave kicked in. So what I expect to see very quickly, once the high is reached, a turn happens, and once it begins, we start to break these levels in on the moving averages. So 11,957, 11,008 or 900, 11,865, 11,838, 11,820. Then it starts to drop more precipitously, but eventually it should continue until it broke below 11,500. Then see, but each time we got there, it stopped itself because that's that bottom channel line. Now it needs to start breaking that bottom channel line, breaking the bottom channel again, all the way down till eventually we're starting to break and head for 11,068 and break that. That is how this triangle will be broken. That will be the signal that it is. First of all, we're going to get it technically on an hourly chart and then a lower base chart because the moving averages are just going to be surrendered. The pressure to the downside they'll all get surrendered all the way through. So that's where we are. Those are the signs. Otherwise, I'm looking for the upside to continue. Moving averages are pointing in that direction. And if I go down on my moving averages, they're just going to improve. It just improves. Where we have even the 200s are in alignment and they'll start turning higher. And again, they're going to the 15th, everything's in line. And you can see how the 200s, the EMA and the SMA are beginning to turn and go higher. Okay, so that remains in effect. You will start to see it on these smaller time frames. Then if the market starts to break, it'll break here. You'll see it. It'll break the 50. It'll break the 200. By then we're dropping, and it's going to have good reason. Or actually at that point, it's like, who cares? They're doing it. And if they're not letting up, the news will make itself very clear for you. Right now, I'm not looking for that. Right now, I'm looking for it to continue to move higher. And if we move back out to the daily chart, to complete the C wave, and likely right up in here, and then turn and go lower in the D wave, and then turn, go up in the E wave to finish the minor fourth wave. Okay, that's it for today. Next update will be on Monday, July 18th.